Why is Coinbase's stock surging while the crypto market bleeds out? Solana announces a new major partnership, and Hyperliquid is becoming a treasury asset and could go much higher from here. This is your Altcoin Buzz News. Hey, what's up everyone? My name is Cody, and if you're new here, make sure to like, subscribe, and turn on notifications so you know when we drop latest content. Follow us on Twitter, Altcoin Buzz AO, and as always, it's not financial advice, and wish the best of luck in your crypto ventures. Alright, good morning guys. We had FOMC yesterday, which we'll get to in a second, but Bitcoin's price is pretty much hovering around the same spot, just under $105,000. We didn't have too much that happened in terms of price change yesterday, and we also have a bank holiday today, which means the TradFi markets won't be open, so I kind of expect a little bit more chop today for the crypto markets as well, just pretty much around the same area. I do expect us to at least take out this wick here down at $102.6 thousand at some point before continuing higher. But I also expect us to take out these probably at some point as well, unless we just reverse from here. So if we want to come back, we need to break back above this level, hold above it on the daily chart, hold above $107,000 before we can start to go higher. But as of right now, we are making these lower highs here on the daily time frame, and so it's not looking too ideal. And because of that, I think if we're going to continue this downtrend market structure, we're going to then take out these lows here at around $100,000 at some point, probably come down into the mid $99,000, fill in this inefficiency of this candle right here, and then we'll continue higher at some point. So that's my thought process for kind of the long term right now. But as of right now, we don't have too many good news catalysts coming up in terms of, war headlines and all of that right now. So we're pretty much just chopping right now. I wouldn't be too surprised if at some point we came down, took out these wicks before heading higher. And we might just be in for another choppy couple of weeks. But then we have the Federal Reserve is keeping interest rates at 4.25 to 4.5%, with the Chair Jerome Powell addressing ongoing inflation concerns and a strong labor market. So he said this:
"My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Despite elevated uncertainty, the economy is in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has come down a great deal, but has been running somewhat above our 2% longer run objective. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments."
Now, our Crypto Talk has a pretty good explanation of what happened. So they said today the Federal Reserve kept interest rates at their 4.25 to 4.5%, and that's the fourth pause in a row now, and it was expected. Only 4 out of 19 Fed officials expect any rate cuts in June 2025. So why no cuts yet? Simple. Inflation is above the Fed's current target. CPI is 2.4%, core CPI is 2.8%, and the Fed's target is 2%. They're not turning the money printer back on yet, which means tight conditions stay longer. Yes, the economy is improving and jobs are steady. Growth isn't collapsing. The Fed is still worried about Trump's tariffs, global tensions, and sticky service inflation. Rate cuts delayed for now, but they'll come for sure and follow China and Europe. So you can see here, China's interest rates have been being cut, as well as Europe, and the Swiss bank actually just cut as well today. So, Europe is cutting, China is cutting, but the US interest rates are staying here steady for the fourth straight month. So what does this mean for crypto? It means that we're entering an extended accumulation phase, not a blow off top, not a crash, just a quiet period where smart money accumulates while everyone else snoozes. Risk on assets like altcoins won't go vertical without more liquidity, and liquidity equals cheap capital, which equals rate cuts or quantitative easing. Until then, altcoins will move on their fundamentals, Bitcoin institutional adoption, and Bitcoin dominance needs to drop for big moves. This also explains Bitcoin's resilience. Bitcoin is still holding above 100K, dominance is rising, and ETF flows are healthy, while altcoins stay suppressed unless we see some solid pumps in narrative. So when is the next real bull phase? It's not until the Fed pivots. No rate cuts equals no liquidity rush equals no parabolic alt season. That's just how this market works. You need the money printer to go burr. Now, if you zoom out, the Fed is cautious, not bearish. Crypto is strong, not over, and the alt season is just delayed. Accumulation, repricing, and parabolic endgame in Q3 and Q4 this year. So that's pretty much my thoughts as well. I think we have the really parabolic phase towards the end of this year, kind of like the last cycle as well, where we had a kind of a slow summer, and then in the last quarter of the year, we have the parabolic blow off top in November, December-ish. And then we have healthcare firm Prenetics buys $20 million worth of Bitcoin and adopts a Bitcoin treasury strategy. So they're following MicroStrategy as well. And there's a couple others following, which we'll get to in a second. But we also have Borovic saying Ohio just changed the game for Bitcoin. you can now spend your Bitcoin tax-free. You can spend up to 200 per transaction on anything in Ohio without owing taxes. Imagine paying for dinner at a restaurant with Bitcoin, and not having to pay capital gain tax. And then moving on to something very exciting, we have Nasdaq listed Innova raises $50 million to launch HYPE token treasury strategy, becoming the first U.S. company to hold HYPE in its treasury. So we've had ETH, we've had Bitcoin, we've had Solana treasury assets from different Nasdaq listed companies. Now we have the first hyperliquid treasury strategy being formed by Innova, but not just Innova. We also have Nasdaq listed Lion Group Holdings secures $600 million facility to launch HYPE treasury strategy. The company plans to accumulate HYPE as a primary reserve asset and launch next-gen Layer 1 Treasury with Sol and Sui as well. So they're accumulating HYPE, Sol, and Sui for Lion Group Holdings with their $600 million, which is crazy. So now we have two companies which are going to be holding HYPE as an asset. I understand Bitcoin, I understand Ethereum and Solana, but the fact that we're getting down to assets like HYPE and Sui is pretty amazing. That these big public companies believe in them so much. Hyperliquid is now the number one revenue generating protocol in the entire industry. $66.65 million in 30 days, more than Tron, PancakeSwap, and even Ethereum itself. And yet people say $40 to $45 billion fully diluted is too high. But here's the truth. Top protocol revenue, buyback engine permanently reducing supply, no VC selling pressure, no 100x seed round unlocks, a truly aligned community, a team building for users, not exits, lowest holder count among top 30 protocols, and Hypercore plus Hyper EVM equals the most advanced DeFi infrastructure in the game. So tell me, why should this be worth less than Solana on a long enough timeline? Hyperliquid has become the symbol of the cycle, a beacon of transparency, fairness, and hope for what crypto can still be. So Hyperliquid, pretty bullish. We also have HYPE takes the 5th spot in futures rankings. Hyperliquid's HYPE has surged past Dogecoin to become the 5th largest token by futures open interest, hitting $2.06 billion. That's a 4x rally in 3 months, but XRP still holds the lead. Is HYPE just getting started? Now, Hyperliquid is starting to sell off, and this is pretty much what we don't want to see. We were talking about this before, and so once all these super bullish headlines come out, it tends to be the local top, at least it seems. So all these companies were buying all throughout here, and then they announced their amazing news, and we start to sell off. So Hyperliquid had a very nice run up. We went from all the way from under $10 to $45 in a matter of a couple months, which is just amazing. And I still am super bullish on Hyperliquid, just not in the short term. I think we do have an underside retest coming here towards $39. Maybe we come back down here towards the bottom around $31 at some point. And then maybe we consolidate here and then continue higher. This might be an accumulation range for a while, kind of like we've seen in XRP where it had, let me pull up the XRP chart real quick. It might be like XRP where we had this huge run up and then we consolidate in this range and we had this kind of like a deviation above. We might have that on Hyperliquid right now, or maybe we consolidate in this range before we have the next major leg up for a while. So that's a possibility for HYPE. Not saying it's going to happen, but if we don't want this to happen, we want it to reclaim this level at least around $39. We want to see it come back above, retest this, and then continue higher. But ideally, if we're going to see much higher levels, it needs to start closing above $42, $42.50 to start making higher lows, and that will be a lot more bullish for Hyperliquid. So we really need to see it come above there, but a start would be to at least close above $40 on the daily time frame for HYPE. But I think more realistically in the short term, we see something like this where we come back down towards at least the mid 30s in the near term. So that is Hyperliquid. Very bullish things long term, just short term. I think we might have had this little blow off top for a bit. And we might need a little bit more time to consolidate before heading higher. Then we have the DeFi guru saying Solana holders refuse to sell, but what does this mean for Solana's price? Despite weak market conditions, Solana has stayed strong. No mass sell-offs, no panic, just quiet conviction. Let's break it down what's really happening with Solana and what could come next. Solana has rejected at resistance levels multiple times. While other altcoins break down, Solana held the line. Their current price, 146, just above their critical 144 support. But it's not price alone that matters, it's what's happening behind the scenes. Solana holders are not selling. Glassnode data shows exchange net positions are net positive. Translation, more SOL is leaving exchanges than entering. People are holding, not dumping. In 3 months, there's only been 1 week of net selling. That's quiet accumulation. This isn't hopium, it's a shift in investor mindset. The old crowd would have sold on weakness, but now they're holding through the chop even when Bitcoin dominance is rising. So what's next for Solana's price? If 144 holds, Solana could push towards 155, the first resistance, and 161, the next major zone. But if 144 breaks, 136 could be tested and validated in the short-term bullish structure. And this zone is make or break in the short term, which is pretty much what I've been saying for a while. That 144 to 136 range is very crucial to hold. We want to reclaim back above this 145-ish level if we're going to continue higher, but I wouldn't be surprised if we swept out these lows here below 140 and then continued higher. It took out those stops and then went higher. So I wouldn't be too surprised for that on the short term, which we'll get to in a second. But we also have ICP and Solana, a new bridge for open internet. So the internet computer is officially bridging to Solana, unlocking a new wave of cross-chain functionality that moves beyond wrap tokens and trust-based bridges. But this isn't just another bridge. Let's break down why this matters. So what's being built? Dfinity is integrating ICP with Solana through a chain key derived account on Solana, powered by the internet computer's threshold ECDSA, allowing ICP canisters or smart contracts to natively hold and sign Solana transactions. In short, ICP smart contracts can now act as Solana users, no bridge needed. Why does this matter? ICP canisters can now read Solana on-chain data, trigger Solana token transfers, interact with Solana DeFi, NFTs, and dApps, all from fully on-chain logic on the internet computer. So we have an ICP and Solana native bridge going on, and Solana is holding above 146. We pretty much have been calling this. This would be the market structure shift. So if we break down below 145, we are in the short-term breaking market structure. And so what we want to see is we want to come down here, we want to sweep this level and then come back up and reclaim this, and we want to have a market structure shift to the upside. But I do think we get 136 in the near term. We are just continuing to trend downwards. And so we want to see this level come back and reclaim it before we enter a position. We don't want to catch any falling knives as this continues down, because what possibly could happen is it goes farther than you think and it goes towards maybe 123, and then we come back up. So you don't want to catch any falling knives. You want to wait for the market structure to put in higher lows and then be trending upwards, at least on the daily chart, before you enter any major positions on Solana. Because I think we continue to see a little bit of weakness here, as well as the altcoin market, where nothing major is happening in terms of headlines in a good way. So we really want to wait for the macro to change a little bit for Bitcoin and altcoins as well. But you can see we're in a pretty steady downtrend right now for Solana, so not too much to do just yet. And then moving on to Base news, we have Airdrum saying we'll be integrating DEXs from Base directly into the main Coinbase app, enabling Coinbase users to access and trade millions of assets on-chain.
As the on-chain economy has evolved, we've seen millions of assets get created and traded on decentralized exchanges. But only few people have been able to navigate those decentralized exchanges to access and trade the assets that they want. That's why today, I'm incredibly excited to share with you that we will be integrating decentralized exchanges from Base directly into the main Coinbase app, enabling Coinbase users to access and trade millions of assets on-chain as soon as they're created directly in the same safe and trusted Coinbase app they already use. Coinbase will be going from one asset 13 years ago in Bitcoin to hundreds of assets today, to soon having every asset on-chain available to trade in the Coinbase app by default.
We also have Coinbase launching Coinbase Payments, a stablecoin payment stack for commerce platforms with instant 24/7 USDC transactions built on Base. We also have the market is slowly discovering that Coinbase gets 50% of Circle revenue generated from USDC, plus 100% of revenue from USDC on Coinbase platform, plus an equity stake. Plus the Genius Act just passed the Senate. It's a stablecoin summer. Plus they're filing to tokenize stocks on the platform. And this will be the most obvious play in retrospect. If we break above $365, watch out. And at the same time, Max says 212 Americans have at least one credit card. The Coinbase One card will be the most rewarding card in the market, with up to 4% Bitcoin back on every purchase in every category. No-brainer card for everyone in crypto today, and a great one for the next 100 million plus to start stacking. So Coinbase's stock. Look at this. Even though the market is down, Bitcoin's pretty much neutral on the day. Coinbase's stock is up 16% on the day, which is kind of crazy. We have to go to a little bit of a higher time frame for these stocks. But you can see, when we initially IPO'd back in 2021, Coinbase's stock came out at about $430, and it's been downhill ever since. So now we're starting to make new higher highs on Coinbase and higher lows. So we're starting to trend upwards. We have this single 16% candle coming back up here, which is massive. The Genius Act is getting passed. A lot of these things are happening, which is bullish for Coinbase and USDC as well. And Coinbase being so heavily integrated with USDC is very bullish for Coinbase as well. And so once we start to break back above here, we'll be heading towards new all-time highs very soon, I believe. And so we're at currently $295 with this huge, massive candle upwards. There's a lot of volume, a lot of momentum here. I expect a little bit of a pullback, and then we'll probably continue higher over the summer. But the fact that Coinbase is, surging so much compared to Bitcoin and the rest of the crypto market, which is sideways, is actually amazing. And then lastly for today, we have Binance Earn launches soft staking, which is something that we've all honestly needed for a long time. The product called soft staking is now live on Binance Earn and supports multiple tokens at launch. soft staking lets users earn on eligible tokens while keeping full access to their crypto. So instead of locking up assets, users can hold support tokens. For example, BNB, Solana, ADA, Sui, TON, Near, Polygon, Algorand, Sonic, and AXS in their spot wallets. They'll then receive daily staking rewards. There's no need to move assets to special accounts or lock them up for a set period of time, which is honestly something that is the downside of staking that they are now starting to fix with soft staking, which is amazing. So this feature is aimed at users who want to earn passive income, and this is while still being able to trade, withdraw, or use their assets whenever they choose. For example, someone holding Solana in their spot account can earn staking rewards daily, and they can still sell or transfer that SOL if the market conditions change, which is very huge. A lot of times when you unstake something, you have to wait 21 days to be able to unstake it, and by that time the market could have fully collapsed and the price could be down 60%. So being able to do that, at the same time, earn rewards while also still being able to sell whenever you want is very big. Flexible earning tools like soft staking are part of a broader trend where investors are seeking out convenience, low risk, and simple rewards. So that is Binance's now soft staking, which I think we're going to start to see a lot across a lot more platforms as well. And that is the video for today, guys. I think we're going to kind of continue to shop. It's a bank holiday. Usually on holidays like this during the week, any move that happens, if it's a major move to one side or the other, it usually gets reversed the next day. So if we go down, heavily today, it'll probably get reversed. And if we go up heavily today, it'll probably get reversed as well. So take that into consideration for this bank holiday today as well. And so that's the video for today, guys. I hope you enjoyed, and I'll see you tomorrow.